For the first time since 1996, China and the US have reached an agreement on trade tariffs. Encouraging news for the two countries' relationship, but what is the economic situation? Nick Stamenkovic joins me down the line to discuss. Nick, inflation in China remained low in October. Some economists have pointed to lower commodity prices as the reason, but others argue subdued demand from China is instead impacting commodity prices. What is your take?
Well, I think you have to differentiate between the cyclical and structural factors. Clearly, cyclical factors are lower oil prices. You're seeing that in reflection of not just oil prices, but commodity prices as a whole, which is just a reflection not just demand factors, but particularly supply side factors. But on top of that, the Chinese economy is going through a medium-term restructuring, and it's becoming much less dependent on investment and exports, and the hope is that consumer spending will increase over the medium term. But at the moment, the domestic side of the economy is quite sluggish, and that was reflected in another sizable trade surplus we saw for October.
Amid the cooling economy, China has received fresh criticism for lack of reforms. However, next week sees the opening of the Shanghai-Hong Kong Stock Exchange Connect. Are you citing this as a significant step?
Well, it's certainly a step in the right direction. We're seeing China trying to internationalise the Chinese yuan. They're trying to, slowly open up their capital account, and we're seeing some reforms in the domestic economy. But remember, it is a domestically controlled economy, so it'll be done on a very slow basis. We saw that with a 5-year structural look ahead earlier this year. They have got lots of plans, but they won't be bullied into taking those measures. They'll do them as they see necessary. But slowly but surely we are moving in the right direction, and that's further evidence that China is moving slowly away from a command economy and is becoming more market-orientated in certain sectors.
Despite this downbeat report, the dollar yuan fell back to 6.12. Some believe at this point the pair looks likely to continue lower until the PBOC takes bold easing action or otherwise signals that the yuan is becoming too strong. But what is your outlook for the pair?
Well, I think we've seen a decent rally in the yuan since the summer. We saw some, capital inflows. We've seen the trade pictures improved. But as I highlighted earlier, the Chinese economy, is suffering from, is going to face a severe structural or restructuring going forward, and that means that investors are revising now their growth forecast not just for this year, but for next year and the year ahead. And investors are getting used to a lower trend growth rate. And indeed, the Chinese authorities seem to be quite happy with that. On top of that, I don't think the Chinese authorities want to have renewed capital inflows because that could cause more speculative pressure and cause problems to the property market down the road. So they've got a very difficult situation facing them. But I think, starting next year, I would expect the early part of the year, the yuan to come under some downward pressure. I think the weakness of the domestic economy suggests the authorities will probably have to ease somewhat in the next few months. They're not going to do it drastically because they're still concerned about leveraging the property market and still concerned about the shadow banking system. But I think most of the appreciation in yuan is now probably behind us, and I expect a slow, steady depreciation through the course of next year. Clearly, it can't be too quick because that will upset the Americans, and also we're seeing a depreciation in many currencies across the world as countries try to improve their competitiveness, and China would probably just reinforce that, putting pressure on other Asian currencies to follow, particularly in light of the yen's sharp depreciation against the dollar.
Nick, great to speak with you once again. Thank you. Well, viewers, today is China's biggest shopping day, known as Singles Day. For more on that, please do click back for our press review. Thank you for watching.